For more on the Brexit and market trends, we are joined by Joe Saluzzi. He's co-founder of Themis Trading. So let's talk about Brexit, even though Andy told us that nobody in Bentonville, Arkansas is talking about it. We're still talking about it here because it seems to be still moving the market in some way.
Yeah.
But you think we overreacted on Friday.
Yeah.
Is it really in the back burner? Do you think it's over for the summer?
No, I don't think so, not yet. I mean, certainly leading up to it, a lot of people, especially on Wall Street, were very concerned. Seems like Main Street didn't seem to catch on until the actual vote happened. But people were concerned, and I think they actually were paring back on some positions going into it. When it happened, just like any other event, the volatility spiked dramatically, and then it calmed down. And that's what I'm looking at now. I'm looking at the volatility index today, which was, it was 16 and change, I think it was. It's calm. So that tells me that's a good thing. However, if you look at the bond market and you look at 2.25 yields in the 30-year, that tells me there's still fear. So I'm still concerned, although it also tells me that the Federal Reserve and all the central banks will be in the market if they need to be.
So what do you do with that fear, especially heading into the summer? How do you position yourself?
Well, we're lucky. We're agency traders, which means we just trade on behalf of our institutional clients. But I think for them, they're cognizant of it. But if you're a value investor and you're a deep value investor and you saw some bargains, sure, they scooped them up, but they didn't panic, which was the key here. But like you said, 2 days, it doesn't mean we were 2 days down, 2 days up. We don't really know. And we've seen these, it's not like 08 and 09 where there was rapid reactions. They were violent back then, and they were violent the last few days, but you don't have that credit crisis going on, which is a big difference.
One of the things that you've been talking about a lot the last few years on behalf of your clients, because you're trying to make, good deals and good trades for them, is the rise of high frequency trading and a lot of the concerns that go into that, how it is, is it a level playing field? Is it not? So we've got some big news coming out because the IEX proposal looks to be approved and moving ahead. You think that's going to be a big deal?
Yeah, we do, and we're looking forward to it. We were big proponents of IEX. We were on record. We wrote a number of letters to the SEC, but we think that they're going to change the model, and we've called them disruptors. And here we are at Yahoo, right? They are a disruptor to the finance world, and they're going to change the way stocks are done. And all it took was a 350 microsecond speed bump to change everything, or at least that's what the argument on the other side was. The people who were against IEX were complaining so much. They were saying so loudly how this would ruin the market.
And do you think there is some risk to the market getting disturbed a little bit, maybe not ruined, because the integrity of the prices isn't going to be there because of the speed bump?
Not at all.
Why not? Because how can the prices still be the same if there's a little bit of a time lapse somewhere?
Well, that's actually what's distributed to the public SIP, as they call it, is immediately once IEX has the quote, it goes through this magic shoebox, it gets displayed on their venue, and that's what goes out to the SIP. So in fact, and by the way, 350 microseconds is 350 millionths of a second, which is, if we blink your eye, it's 200 milliseconds, which is a lot longer than 350 microseconds. So no, I don't think so. In fact, what I think it's going to start to do is start to aggregate liquidity, which is what we've wanted for years. We've got 12 stock exchanges right now, 13 when IEX comes on board, over 40 dark pools. But what happens, we think, was some of these smaller exchanges will start to go away, maybe some of the dark pools will go away, and you'll start to reduce this fragmentation and increase that liquidity.
Why do they go away? Because the traffic's going to go to IEX,
Potentially some, but I also think that they may need some regulations here. And actually, it's funny because Canada just approved a rule called the market share threshold, where they said if you don't have at least 2.5% market share, you're no longer protected. Or in other words, I don't have to trade with you. I think a rule like that would go really well here in the U.S. IEX is right at 1.5% right now. As soon as they go lit, they're going to be way above 2.5%. Others, there's a lot. There's actually 4 or 5 that are below 2.5 right now. And
so they'll go away. Do you think there'll be followers, though, or competitors that will come to IEX, or do you think they're sort of going to come in and then we're going to see a shakeout of the players?
Well, what IEX is going to attract is long-term investors. And that's guys like my clients are long-term investors.
So you're
and they are going to attract good quality, clean flow, which is what we're trying to find all day long. We're trying not to find the noise that's back and forth in the market. So, and we've been trading on IEX for a long time because they're a dark pool right now. And we've gotten very good fills over the last few years, and we expect the same as when they become an exchange.
And how long until September, October? I mean, it starts August, September.
They're going to roll it out slowly.
When will we know if it's a success?
You'll see the market share. You'll see the market share right away.
Do you think it'll happen pretty quickly, or do you think it's going to take some convincing? I guess is what I'm trying to get at. How quickly are people going to go there? You're already there, but they need more market share.
They do, and you have to convince some of these brokers who have the algorithms and the routers to go that way. But bottom line is, if they're a protected quote, which is what they will be, you have to trade with them. If they're on the offer, if they're on the bid, you have no choice but to trade with them. So it's going to encourage guys like myself to even post more liquidity. So that's where I want to be. I want to interact with more natural flow. So we think it'll ramp up quickly. And I wouldn't be surprised if they ramp 8 to 10% pretty quickly.
Okay. Well, we will all be watching. Joe Saluzzi, thank you so much, co-founder at Themis Trading. Always good to talk to you.
Thank you.